Hello traders, good weekend. Vladimir here, and this is the weekly forecast, 3rd of July 2016. So happy beginning of the month to all, and happy Independence Day to my American followers. Happy 4th of July. I hope you have a wonderful time, great vacation, great family, friends and your loved ones time with, and I hope you enjoy very well and rest a lot, as this week is non-farm payrolls week. And quick reminder, the last month we got a non-farm payrolls was very disappointing. So the biggest question in the market is what is going to happen with the American markets, job market right now. Currently this is the only factor yet the Fed officially follows to understand if it's able to raise rates or not, even though that after the Brexit effect it seems the Fed is pretty far off it. So after the whole Brexit idea, the markets returned back all the way. There was one reason for that, actually, the expectations of the quantitative easings to take another round. Mr. Carney, Central Bank of England, already said we will take action. If it means with rates, if it means with other steps like printing money, they will have in their mind all it takes in order to bring Britain back to the good reality they used to know. Even though being related to the Eurozone, I'm not sure how good it is financially, but who am I to judge? So what's the best things to trade this week then? As I said, from payrolls, moves might be tricky, but let's put the things on the table and let's quickly cover the opportunities. Let's start with the euro dollar. Euro dollar technically and fundamentally has all the reasons to get one more bottom. That means the pressure is yet powerful. Even though it had a beautiful candle to the upside, the pressure yet is bearish, nothing is yet bullish. And as I said, technically, according to the monthly chart cycles, it has all the reasons to continue one more low to create a bullish divergence. We are looking after that, and every rally on the euro dollar, we know how limited it could be, because Mr. Draghi and the Central Bank of the Eurozone, they cannot allow the euro to get too strong at all, because the European situation, the European financial situation, the European economy is yet suffering big time, very big time if you ask me. So their goal is to keep helping with all the tools they have to the Eurozone. In other words, they might consider another negative rates round or another quantitative easings. In simple words, it looks like the whole world is slowly stepping back for another round of quantitative easings to increase the bubble even more, and unfortunately to make the uncertainty even bigger for the future to come. On a very short term, short term doesn't mean a day or two, in that cases short term means few years. That's of course helping to boost the markets, because there is no alternative to hold money in a bank or in a classical situation, so go and invest in the markets. The problem is that people become less and less spendy, and they spend much less. That's the numbers. That's not me saying, that's the numbers. The rich spend a lot, of course, but majority is not the rich yet. So sell rallies on the euro dollar was and remain my plan. Does that necessarily means the euro cannot suddenly rally again towards 116, 118? No, it could. Okay, but the chances to the downside, which means 105 or even lower, like parity, are much bigger, and every rally to come should be an opportunity to go for a sell. So for me, it is a great time to be in investment there, and the higher it goes, consider even have bigger investment. But On a short-term trading, we need to go with the divergences, which is building right now on the 4-hour chart, slowly build itself. So the only thing for the short term to confirm would be actually like a breakout, rally, and a sell. Break below the trend line, of course, like here, right? That's the idea of the euro dollar. Now, that's for trade with risk versus reward. For investment, as I said, it's already great levels. Jump in, hold, and have passions. That's the most important thing. What do we do if it, in case it rallies? Let it go. Okay, investment means we are holding, we are waiting for the cycle to take place. Once it's ready, it will take place. But for classical risk-reward trade, we will let it go, wait for the breakout, retrace, and then looking for a sell, aiming to at least the last low, but of course, expectations much higher. Pound dollar, with the release of the news from Mr. Carney, the pound lost its value from the 135 zone towards 132, 300 points. It's like 2+% movement immediately. The question, what's coming next? I said it then and I said it once again now. Every rally on the pound dollar is yet a sell. Why? There is no divergence on the weekly. There is no divergence on monthly. There is no divergence on daily. Therefore, there is much more to come. But necessarily, does it mean that we are going down from here? No. Technically, everything could happen like this. These scenarios are doable. These scenarios are acceptable to close the gap around 136 plus. If it happens, that's awesome for us. Don't get scared by that, because that will just give us the opportunity to look for the breakout of the trend lines to come, to look for the shorts to take place. We want rallies. If they will take place, that's a great opportunity to go for a sell. How long this sell-off could continue? Until we recreate divergence. Okay, bullish one. That could be 125, that could be 120, that could be 115, that could be stuck on 130. It's all doable. But with the quantitative easings and the rate cuts, as Mr. Carney said last week, all that brings the bears back and they control. And the crossing between euro pound is slowly going to the place we discussed. It's above 0.85, probably around 0.87. This is where I would expect this pair to rally and then to start that drop down. On the intraday and the short term, we do have divergences here developing. So if we can get two waves down to something like 0.8150 down to 0.8050 or even 0.80, I would consider this as a wonderful opportunity to go for long, aiming the 0.85 or 0.87 zone. Okay? If it just keep going up, let it go. This divergence will turn to be very continuing, coming to its edge, and then breakouts to the downside would be a plan to go with. Ideally, we are after pullbacks down and go for a buy 0.8150, 0.8050, or maybe even 0.80. That's the zone we will want the pair to go down to and start the attack. Dollar yen, well, dollar yen is technically, there is no divergence yet. Not daily, not weekly combos. In other words, all the reasons for the pair to drop down, 95, 97, definitely acceptable areas until the divergence would be recreated. The question is what's going to happen with the Central Bank of Japan, which said they consider to do one-side intervention without making any agreements with other banks, just do interventions by their own. That's what gave the last time the boost. I don't think the Central Bank of Japan will actually do that right now already. They will probably wait to see if the market is yet against them before they act. So for me, as long as there is no intervention, and I repeat, As long as there is no intervention, the pressure remains bearish, and for me it's yet a sell, which could start easily right now since we had a false break already. So it could make the momentum rally and a crash. Okay, so if we drop to 1 hour chart, that's what I mean. False break here, momentumal breakout, pullback, and a sell. And second scenario which we will follow would be if all that was just one, where's my pen disappeared? Here. If all that was just one pattern here, pull back, one more rally towards 104-ish, maybe a bit higher, and a crash right after that. That's two scenarios to look for sell, as long as there is no intervention from the central bank. Aiming 100 would be the first thing to do, then 97, 95 for one more low, one more bottom for divergence would be the next target to follow on the list. New Zealandian dollar, from my point of view, is one of the greatest opportunities, and here is why. The central bank from New Zealand already said if there will be the reason, they will go and intervene, which means, in other words, they will not accept serious rallies, especially not on reality, where all the other central banks don't hesitate and take actions to devalue, to decrease the value of their own currencies. The New Zealand stayed behind on all that terms as for now, and that's why they will not allow it to happen. So, looking on a weekly chart combo, the pair could start its crash from current zone, or the pair could start the crash from here. For us, it is already in a great sell zone. Why? Let's put the lines here. We had 1, 2, 3. We did have a false break, we do have a divergence. This is a place to start, be in as investment. From here we have two ways it's gonna happen. One, let's remove this and let's see what is acceptable. Another false break and move inside this range, something like that maybe, with pressure to drop down again to around 0.67 approximately. Okay, or the alternative is one final rally towards 0.74, 0.75, maybe false break of the tops like this, boom, 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 and a crash to come right after that with some intervention. We did have false break, we did have divergence. For us, it is a sell. Another scenario is we're already in a potential ranging mode, and that's what could cause it to move inside this area. As investment, from my point of view, it's already in a great place to go for sells. As short-term trading, we have 1, 2, 3. We have bearish hidden divergence right here, and we have the 1 hour chart continuing divergence forming as well. Ideally, break below this trend line, and we have all the reasons to go for a sell. Okay, I expect it to drop to below 0.70, probably to something like 0.6950, 0.69 at first stage. Final target for the sells should be approximately around 0.67, 0.6750 zone. That's where I would be aiming. New Zealand and Canadian, another pair which I expect to make the drop down. The question is, the only question I don't have the answer for. As for now, is it right from here or one more false break? Last week it was moving the entire week on this range and still holding this trend line despite the attempts to break it out. So I would prefer right now to wait to see what is coming in reality. If we manage to break this bottom, retrace up, then of course we can look to sell versus this stop. Okay, if it's just continue higher, we will let it go, aiming a bit higher around 0.94, 0.95, closer to this very top trend line. If we can get it there, of course the pressure on the sellers will just increase and take it even more serious. Dollar Canadian, from my point of view, approaching to a potential buy area, but here comes the but. Take a look on the weekly chart. Weekly chart created with the gap equal tails kicker. See that? Almost equal tails kicker. On many other situations, this is a beginning of another down move. Could it happen? Definitely, especially now with the non-farm payrolls week to take place. If the Federal Reserve will have all the reasons from the job market not to go for a rate hike, dollar is going to suffer, which could make the dollar Canadian take one more bottom and recreate this divergence right there. It is 100% doable. Now for me, for a short term, I think there are all the reasons for a possible rally, and to try this rally I will want to get amazing risk reward. What do I mean? We did have a false break here, but we didn't gain momentum from this place right here. No, we false broke once again. So I want neither one more false break, a rally above this high, correction, and try the buys, or if we already have the bottom, then a rally above this high, two waves down, and then break about this correction and try to take the rally towards 132, 135, 136. This would be the areas I would be looking for. And what do we do if the pair just keep dropping down? Let it go. If it continues with the weekly momentum started to be gained, we are after sales aiming 122, maybe even lower, like 118 for example, before we switch for a buy for a long term. So with two scenarios to follow, which direction and who is going to take over here, bulls or the bears? Keep an eye on this one, it's really interesting. And pound New Zealandian also, it's not ready yet, but we have been talking about the areas. 190 didn't hold with divergence after the Brexit. The next level we spoke about would be 180, even 175. Keep an eye there. That's pretty much where we would expect the divergence to take place. If we measure on the last cycle, this one, if we put the levels, we are currently on 100, but we don't have any divergence. Therefore, next areas to pay attention to will be slightly below 175. That could be really monster to take another bottom for this pair with an extreme to form and start the investment. Don't try to push the button too fast. There will be opportunities. We have to wait for the divergence to form. We have to wait for the things to take place on the right timing. Very important. And then make an action. You can set an order like 175, even 173 for example, and go with the investment and for long run, because from there I do believe when the reverse comes we are after very high numbers. But it's not ready yet, okay? It's building itself, so patience is required. And talking about the New Zealand pairs, there is one more we already follow, that's Aussie Kiwi. Aussie Kiwi could easily go and create 103, 102, 101 maybe even before the rally takes over, or already respecting the support, which it does so beautifully several times, and fly. This is exactly why, from my point of view, it's best to be in as in an investment. And if you don't want to be in investment, if your account don't allow that, fine, take the last high, make it broken, make sure you gain momentum by creating higher highs on the MACD as well, and look to buy two waves retracement, breakout, two waves retracements or triple wave retracement, breakout to the upside, and we can go and aim for a buy here. So that's basically the best opportunities we have on the list. Aussie dollar following the Kiwi dollar, from my point of view, is getting for another sell opportunity, neither from here around 0.75 or with one more fake around 0.7650, 0.77. We have the two waves forming here. We will need to get these two waves broken, and then we can go for sell opportunities. Okay, aiming this way, aiming to the bottom of the channel once again. That's approximately 0.072 at first, and then maybe even all the way to 0.88 again, even though I am doubtful. So look and keep an eye on this too. That might take time here, and that's very important to understand, that not to force the things to happen. Okay, very, 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 very important. Okay, talking about the gold and the silver. Silver is approaching to a monster, and we have the silver next to 20 here. Daily is on extreme, weekly is not far from there. That's a real monster. Now, should we go and try this already like ourselves? Not really. Even though it's extreme, yes, but higher time frames don't have any reasons to go for sell. So we would need at least this extreme to find a place here with some other time frames confirmations. And the 4-hour chart don't have any divergence by the extreme as well. So the best thing would be if we can get something like that here, 2 false breaks, then short term try the sells, aiming by the trend line and aiming once again for new highs. Same with the gold, which from my point of view is approaching towards 1380, maybe even 1420 on the same round, maybe even higher to complete the 2 waves movement. Stay long and buy dips. That's all I can say here. Every 2 waves, if we can get them, and we should go and buy every 2 waves. Okay, remember that. That's basically the entire plan for all such scenarios. Okay, now quick view about US oil. I've been asked a lot about it during last week. What's my view here? Oil, because it didn't respect the equal movement here, has all the reasons to continue higher. In other words, oil can do this duplication to 52 and 54, 55 until it recreates divergence. So right now we will want this trend line to be broken, get momentum, pull back and look for buys as long as we remain above 46. This is the area to hold. Okay, and as long as this is this situation, the scenario, oil has all the reasons to keep the rally. Could it go deeper first of all before it retraces? The answer is yes, but the way it looks and the way it develops the weekly and daily combinations, bigger chances are for buy. The only thing we will hold, if the trend line holds and the resistance holds and we retrace back with a fake breakout like this, for example, break, pull back, lower lows, and then we will be looking to go for sells for 2 waves. That's the only setup we can try the short. Indices, as I have mentioned, are rallying, and there is one clear reason for that: intervention to come. Central Bank of England said that. Federal Reserve hint as well that they might do all it takes to bring in the liquidity to the markets. That means, in other words, quantitative easings, and that's what boosts the market to the upside. If that's about to stay, we are going for new highs, which I said not once will be last highs. Yes, it could take time. With free money and intervention, nothing technical could fight, to be honest. And if that's the situation, we are going for a rally, and that's true about S&P, that's true about FTSE, that could do this one as well, FTSE of course, I call it FTSE here. That means we can easily go to this area and maybe even to the 161.8, which is 7200s, a little bit higher. So as long as the story of the intervention remains on, buy dips remains on as well. But for that's for short term only. For the long run, look to sell new highs. That's really not healthy, good and real economical environment. That's not what investors need, and be careful. That's all I can tell you. Bubbles can explode and within, you know, just one movement. So don't get too much excited because of every rally or anything like that. On the short term, of course, you can ride and enjoy it, but as an investment, well, I might be wrong, but you know, when the balloon is going up and you try to jump on it from a floor, there is a very, very, very big chance you will miss it, right? And the way down, yes, unfortunately, much riskier than any potential profit from rallies. So that's why short term can try that. Long term investments, it's best to look for false break on new tops and join the sellers. Free money doesn't bring good things for the future, that's for sure. It's only to shut some mouths on the short term, probably Wall Street mouths. So that would be all for today, guys. Of course, there will more to come during the week. We'll have much more new setups, but as for the beginning of the week, it's all, remember, tomorrow is 4th of July. The volumes are very, 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 very low, so take a day off, and I'll see you again on Tuesday. And thank you for your time watching this video. I hope it helps. Feel free to share with anyone who you believe can have any benefit by watching that. Feel free to comment, leave your feedback. That's what motivates me always. I told you that not once. If you have any question, write it down. I will reply as soon as possible. If you have any pair or anything else, any other instruments you are interested in, let me know. I will reply as soon as possible. Thank you for your time watching this video. Enjoy Wimbledon and tennis. Enjoy the Euro 2016. There are great matches lately. So have fun, guys. I'll see you soon. Cheers.